We are live. Welcome everyone back on the Financial Fox Smart Investing, every week discussing the main topic in the crypto and financial market with Zach Meir and Clem Chambers. How are you guys?
I'm great.
Well, I feel even worse than I look.
No, come on, Zach. First of all,
that would not be possible.
First of all, happy birthday to Clem. That's
68 again. Is it 68?
No, I mean, I realised I've always wondered what it'd be like to be 40. And now I know, but it's very similar to like being 50.
Luckily, you've got a face like a baby's bottom. So, you know, you look so young, right?
Is that why you keep wanting to slap me?
What?
Oh, God.
I didn't hear what you said.
I think age is always in your mind, isn't it? It's
in my case, age is always in my knees.
Age is on your face. Age is on your face. You can literally, I mean, what are you talking about?
Yeah, well, that's true. But, you know, there are benefits to be older, which is...
I mean, you look like you're 23, but I mean, obviously, you know,
No, I'm going to be Zach. My birthday...
You look like a Generation Z person.
It's my
crypto and lattes.
My birthday is near yours, so you
and tattoos. And tattoos as well.
I think in this day of political correctness, you're not allowed to say you're old as the woman you feel.
Yeah, well, I feel 60 though, but I'm 36, so yeah. Anyway.
At least the viewers might have got my joke, but never mind.
Okay, so what do we have to discuss today?
Well, go on, Zach, you go first.
I'm very excited about inflation in the stock market, and the idea that actually inflation is good for, it's probably at least good for big companies who can pass on the pain, and they have pricing power, which they haven't had for like 20 years, which is great. Pricing power is fantastic in business, and that sort of explains why the FTSE's gone up 500 points in the last few weeks. And why I would actually say it's going to go to an all-time high, which I think has to be like above 78 or 79 or something like that, but it could go to 8,000. And all the boring companies like the M&Gs that Clem likes, also the fact that
love M&Gs,
all the companies, all those companies where they can just rip you off and you can't really do anything about it, or it's hidden costs, hidden insurance and all those sorts of things, boring stuff. All that's great, and obviously the big boys, the BPs and everything else, the oil companies, energy companies, they're all having a party, and the government's really slow to do anything about it. So they're going to make lots of money. So I think on that basis, inflation is great. The cost of living crisis is great. Profiteering everywhere. What's not to like? And the other final thing. Interest rates have gone up, but they haven't passed that on to deposit holders. So it's a real encouragement. Even my 90-year-old father says, I should buy some portfolio of dividend stocks, because you can get 5-6% rather than 0.1 or 0.3 or whatever it is. So happy days.
Well, you can actually get 6.3% dividend yield on the IUKD, which is the FTSE tracker, which specialises in dividend stocks. So that's trading essentially, but 6.8%. If you go,
which one was that?
IUKD, that's the iShares dividend tracker.
You're right.
And it's 3.8 on the FTSE 100. So if you buy the whole FTSE 100 ISF, you get 3.8 yield on that. So you just bought the whole index. Now,
my father should just buy that.
Well, if he buys the FTSE, he's got the uplift on the inflation, and he's got the uplift on where he's got the 3.8% yield. If he goes for dividend stocks, I think he gets the uplift on inflation, he gets a fat dividend, and he gets all the upside on the cheapest chips bargain basement FTSE companies, which are going to get bought up and asset stripped by Americans particularly. So yeah, I mean, I just wrote a piece saying actually it's a bit of a no-brainer. Don't have to read my newsletter anymore. Just buy the IUKD and forget everything, and just go back to sleep and wake up in a couple of years and you're in great shape. Because it's hard to beat 6.1%, right? The only thing you've got to worry about is the iShares people go mad and start picking rubbish dividend shares. But I didn't used to like that, because they had some slightly spicy companies who had big parts of that tracker.
So what's the yield? That's the iShares UK dividend. What's the yield on that at the moment? You said 3.8 or
trading is ISF, which is the FTSE 100, is 3.8. RUKD, which is the dividend tracker, which is very similar, and particularly similar these days, it's 6.5, 6.8. It's you know, it's incredibly high yield. Now, as the price of those equities rises, you'll get a pop in the capital appreciation, of course, but the yield will come down because they'll go up. But if you're thinking about 6.8, if it came down to 3.5, you'd get pretty much a doubling in your capital amount, because the shares would have to double to bring their yield down to 3.0. So the upside is gigantic, which is why I'm up to my ears in stocks like that. I read their list, and I've got every single one of them in their top 20.
Clem,
that's a big opportunity.
Just one question on this IUKD. I'm just looking at the chart, and it looks like it was very high in 27 or something, 28. 2007, sorry. 2007, 2008.
Well, yeah, it probably was. You know, what happens with these trackers is that the company, I think, is it BlackRock? I can't remember who it used to be, Barclays, but iShares, they go around and they go, this is our rules. If you've got a market cap over 1, and you've got this is your balance sheet, and you're paying this amount of dividend, more than that amount of dividend, you're going to be in, and we're going to put 1% of our tracker into you. Yeah. And so it's basically a blue chip dividend paying bag portfolio. And they've gone really blue chip over the last 3 or 4 years. Before that, there's some things that I didn't consider to be blue chip at all, which were paying big dividends in there. But now it's all blue chip. It's all big companies, you know, the BATs of this world, the M&Gs of this world, the big FTSE 100 companies. It's solid FTSE 100 companies. About 80% of it is FTSE 100 companies, maybe even more than that. So it's a very, very sound blue chip portfolio. Now, it doesn't mean it won't go up and down. It doesn't mean that something could go horribly wrong or we couldn't get struck by a meteorite. But from my point of view, 6.8, that's the last 12 months, that's how much dividends is paid out. 6.8 is such a huge cash cow that anybody with half a brain can borrow money at 4%, buy that company paying that kind of dividend, and make it 2% just to borrow the money at 4% and hold on to that company and get paid 6% dividend. You know, it's a no-brainer for private equity, people like that, or American companies in the same business that want to expand. So very soon, now people can get on airplanes and come over and do a deal. All those companies are going to be under attack by predators, and their share prices are going to go boom. But going back to what Zach said earlier about inflation, there's another way of looking at this. If you look at 2019 as a base point, roughly where we were in 2019, we're back. Well, we've had about 30% inflation since then. And by the time this is over, there's going to be somewhere between 50 and 100% inflation. So for the FTSE to get back to where it was in 2019, and we will, the FTSE will have to be 14,000. It'll have to be 10,000. I
have an example before, like in the did the indices track inflation, or they go up with inflation?
Well, or is that they didn't. They stayed down. Then of course 1980 occurred, and then they went to the moon. So the complete cluster of the 70s with people like, you know, Heath and all sorts of rubbish people in America and in the UK who were total disaster areas, had no clue what the hell they were doing. That's not the world we live in today. I mean, the people.
So the good news in a way is the longer it takes for the indices to go higher, the bigger the move there'll be. Inflation will eventually kick into indices.
Yeah, inflation is going to go away in 3 years. Okay, it's already crested, and it's going to stay up here until the governments have eroded the national debt back down to about 80% of GDP. And basically stole via inflation the higher rates of taxation from their people, and it rebalances in about 2 years, and we'll be back to an economy on an even kill because of inflation, because inflation is the cure, not poison, is the cure to the state we're in because of all the money they printed to stop the world imploding. The 70s was the cure for the Second World War and all the debts that are built up there. Right, so this is all governmental cure for a complete disaster or for a catastrophe, which was COVID, right? But that is all fixed in about 2 years' time, and then we'll be back on the track again. So we're in a repair situation, and that repair is being dealt. That everyone's poorer. The cost of living is not going up. They got poorer, and inflation is the way that gets through the system. Yeah, they printed money to fill in this gap this chasm, and that extra money, no more stuff to buy with it, causes inflation, which delivers the poverty that we earn by taking 2 years holiday, right? But that will take another 2 years to get through the system, and then we'll be back to normal unless something else bad happens. Yeah, but nonetheless, the same value of the FTSE in 2019 right now would be about 10,000, right? And by the time this process is over, it will be 15,000. It'll be the same amount of money. It'll buy you the same amount of coffees. It'll buy you the same amount of sandwiches. So that's where it's done.
So Clem, in these 2 years that we are waiting for everything to kind of reset, what investors should be doing?
There's two ways of looking at it, right? You can take your money out and sit on it and just let the weevils eat it, yeah? Or you can put your money into the market, try to be as safe a place as possible, and inflation will put the prices of those companies up over a period of 2 or 3 years. So you'll probably end up with the same amount of wealth that you started with. Everyone else gets poorer and you don't lose your money. Everybody else doesn't turn up to the restaurant which you couldn't get into before, and you've still got the money to go there. You can still fly business class because no one else is, because they got poorer. So it's not about getting richer now, it's about maintaining your wealth in relationship to everyone else who got poorer. Yeah. So that is the reset that we're going to go through, and assets will adjust to inflation, whereas paper money won't. So if you go, oh, it's on assets, oh, it's scary, oh, hold on cash, I'm just going to hold it. Well, you're just going to lose about a third of it. Yeah. If you go to assets, it will be a really wild ride and not so happy. But once it's paid itself out, you'll be probably where you were before this all kicked off, which is a lot better than everybody else who don't know what's going on and who took a haircut for 20%. 20% of GDP was lost over that period. 20% of GDP. And if you do use a multiplier on that, who knows what percentage of global wealth is actually lost because everybody took a sabbatical, forced to take a sabbatical, right? Stuff wasn't made. People weren't trained. There's 2 years of people that were not trained over that period of time, and 2 years of people that retired naturally, right? And if you think that average working life is 25 years, that's nearly 10% of the workforce that didn't get trained up at this end and retired at that end. That's why there's nobody to do the work, because nobody got trained, did they? Airline pilots didn't get qualified. Bus drivers didn't get trained. People didn't get their driving licenses. People didn't learn how to stick chickens in plastic bags in supermarkets or drive TIR lorries. And that's going to take probably 2 years to heal, isn't it? But once it's healed, we'll be back to where we were. And most people have taken a haircut. And if we don't take a haircut, we'll be relatively much better off.
So Clem,
just a question. I just want to talk about this because it's on the same subject. So I remember you saying before that gold will eventually kick in. There'll be like a delay, and then eventually it'll kick in and it'll go to, because the inflation will eventually feed through into gold. And I presume, is there also a read across with Bitcoin that Bitcoin would also go up with inflation?
Well, there's two issues going on underneath the hub there, and this could be narrative repair. But I would say that one of the reasons gold was so high before, up to recently, was because Russia had been buying for several years, buy. Well, of course, Russia's selling now, aren't they? Because they've got to fund what they're up to in Ukraine. So they're downward pressure on gold, because you see, people say, what's the point of gold? What's the point of gold? The point of gold is for war. That's all gold's for. Gold is for war, because that's the only thing that people will take as money in war is gold. The reason countries hold gold is because if they have a war, they've got to pay for stuff. And the only money that anyone's going to take them is not their bonds, not their paper, is their gold. So countries hold gold so they can fight wars, right? And Russia built up its gold because it was going to fight this war. They pulled out of Afghanistan because they saw Russia was going to do this, and they moved their troops out of the Middle East more towards Europe. Right, this war is being paid for with gold, and until that gold level comes down, then gold's going to be under pressure. The moment Russia has run out of gold, or doesn't want to spend any more gold, or can't spend any more gold, gold's going to go through the roof. Yeah. Now, Bitcoin, I'm worried about Bitcoin actually being regulated out of off the planet, because all the regulators are going left, right, centre trying to regulate it. And most of them are saying, yeah, we're going to regulate it, but please don't ask to be regulated. So most of them are trying to say, it's not legal to do it here, you need to be regulated, but we're not going to regulate it. Yeah, so that's a major pressure. up until somebody breaks ranks and says, yeah, crypto, come over here with all your money. Yeah, look, yeah, it's great. It's the next big thing. So there's a bit of a pull and push there with crypto, but the actual crypto world has already moved on from the currencies, already moved on from DeFi, already moved on from DOAs, already moved on. And it's now, we will pay you to look at our product. We will pay you to watch our movie. We will pay you to look at our advert. We will pay you to play our game. We will pay you. Because at the moment, we're paying Google. In fact, we're paying Google 150 billion a year for you to look at our stuff because they're getting in the way. But actually, we'll pay you direct. We'll pay you in cash. And that's what's happening now in crypto. And of course, who cares about all that Bitcoin stuff? Which is probably going to be 2 years it'll go berserk again. But right now, it's under major regulatory pressure. Right now, there's a possibility of another shoe falling when the Ethereum does its split. But you can't put the genie back in the bottle. Yeah, it's like Walter Riley brings tobacco from America. That's it. There's no putting that back in. There's no uninventing tobacco. It's taken them half a millennia to get that genie back in the bottle.
Yeah. And all this narrative about Bitcoin being the new gold, I don't agree on that.
Well, you can't fight war. Well, you can fight wars with Bitcoin. I'm sure the North Koreans are doing just that. But it's people, are paying gold, are paying Bitcoin. I think if you're a country at war, people are going to take your gold. I mean, really, in a sense, Bitcoin's private sector gold, whereas gold's public sector gold.
That's interesting. I think what I'm hearing, and it's kind of like, it kind of makes sense, is like Bitcoin is actually behaving more like a NASDAQ stock, so like a tech stock, let's say.
Yeah. I mean, it's equivalent in size. Yeah, it's a $500 billion tech stock. Yeah. I agree with that.
But this angle about private sector gold is interesting. I think nobody has actually been thinking about that.
I haven't. I just made it up.
Yeah, but I think it's interesting. So you should argumentate it.
It's my next article I'm going to write.
Exactly. I think it's interesting because everybody.
But there's been private sector token currency for a long time. I mean, the first one in Great Britain was in the 1660s, and every pub had its own currency, had its own little farthing. I think there were like 20,000 different private currencies in the 1660s. And it wasn't until government realised they were missing a trick to make money that they banned it and brought in what was called the Harrington farthing. But every pub, literally every pub on the street in London would have its own little pop coin. And it'd have, Clem's pub, his farthing. And then back in the 1700s, there was a shortage of pop coins again, and tokens came out again, and it went around the cycle.
Okay, I think I'm going to bring up something from our listeners, and I think we discussed that. We discussed that quite some times ago, or maybe regularly on our show. But let's dive again into that. So UK property. Is that now a good time? I mean, we have seen that actually sales has slowed down. And rent prices are going through the roof. So there is kind of like some panic I think there was a piece from the FT talking about how rent has become really unaffordable for, young people, between 20 and 30.
Yeah, that's a meme. And I keep hearing this.
Oh, meme. That's a meme.
But it's like it's a mind virus. I was talking to this German who was saying that, and I said, "Oh, really? How old are you?" He said, "Oh, I've just done my A-levels." You don't go buy a house when you're 18. I mean, when I was young, which is not that long ago, I suppose, people didn't buy houses until they were 30. When you got to be 30, you could buy. Okay, if you were in Preston, and you could buy a house for £6, but in the south, you had to be 30 to buy a house. It's still the same today. Yeah, people expecting to own a house in their 20s. That was an incredible rarity when I was in the early 80s. And so I think that's just expectations rather than reality.
But what Clem, what about, actually there are people, they are saying they are in their 50s and they are not able to buy anything and they are struggling with rent because rent has gone up so much and their salary hasn't gone up accordingly with the rise in rent.
Yeah, I mean, there's always a lot of people, it's all everybody else's fault, they fail. It's never their own fault. Yeah, they never saved up the money to buy a really, really dingy flat in a cheap part of town. And then, you know, they went out for a meal instead and ran up their credit card bills, etc., etc., etc. Millions upon millions of people have been able to afford to buy their own house through hard work, and quite a few haven't. I mean, it's like going back in the 80s. It's like, oh, I'm going to get an interest-only mortgage. Well, it's worked out for a lot of people, but the risk was you wouldn't be able to pay off the base amount. For that was a risk that you took. If it blew up in your face, you can't say you didn't take a risk, because there was the alternative. And if you were risk adverse like I was, I wouldn't take just own mortgage. No way would I ever have done that. Did I ever do that back in the 80s? And I wanted a fixed rate mortgage. I didn't want interest rates to go up and bite me on the back of the wherever, you know, because I was risk adverse. So that's what I did, and I trimmed and tacked accordingly. Yeah, and you know, if people go, well, you know, I've been renting a house, oh, house at 2 price, I'll wait for my great grandma to die and then I'll buy a place. Oh, I bought a car instead. Oh, you know, I took 2 years off surfing. Oh no, I haven't got a house and I'm old, I've got no money. Oh, someone else's fault. I don't have any sympathy for that.
Okay, that's actually a good point. But question is that still a good time to get on the property ladder right now, or is better to wait and see?
Well, it's actually going to really disagree with you. I would say this: house is the place where you live. You buy a house because that's the place you live. Yeah, first and foremost. Forget it being an asset. That's the place you live. Yeah, don't use it as an ATM like a lot of people do. Oh, I've moved to a smaller place now. I'm old because I need a smaller. No, you've run out of money, haven't you? Yeah, you know, don't play that game. It's the place where you live. If you want to play the property game, once you've got a place where you can live, then play the property game. If that's what you want to do, it's never a bad time to buy a place to live. Yeah, never a bad place. And you know, it's like, well, all this inflation is going to sort everybody out. And the house prices might go bang for 18 months, yeah, and then whoosh 5 years later. But if it's the place where you live, it all comes out in the wash, doesn't it? Because one thing's for sure, inflation never goes away. Never goes away. It's planned to be 2 to 3%. That's the level they consider to be constructed. Well, 3% compound over 20 years. Oh, 20 years, that's too long. I can't wait 20 years. That's a huge figure.
Yeah, Zach?
Well, I can't fault the idea of buying your own place, although I think it's something that most people, I fear, are over leveraged. So they tend to buy a place which is too expensive for their earnings. So that ruins their lifestyle. So I think this balance, you know, you sort of want to buy a place which is, you know, much, you know, like half the price that you'd like, you know, for instance. I think, you know, that's the problem is you don't want to have it so that your mortgage is so much more, or it takes a big chunk out of your day-to-day lifestyle, because it sort of defeats the purpose that you're just, you know,
back in the 18th century when you was a kid, Zach, yeah, you buy a house with as much leverage you possibly can when you start out, and you sleep on the floor for 4 months before you can afford a bed. That's how it used to work, and that's how it. Why doesn't it still work like that? Well, people want all more cons. Well, tough luck. Yeah, and you buy a place you can't afford. You can barely afford to eat. Right, all young couples, whether it was the 80s or the 70s or the 60s and 50s, that's how it worked. Right, people are lucky these days to have the bank of mum and dad to go out and say, "Oh, I'll buy your apartment." Oh, it's just very small. It's not where I want to live. This guy I spoke to yesterday. He said, "Oh, German, I can't afford to buy a place." I said, "Well, out in the east, property's like almost free." He said, "Yes, but I do not want to live there." Oh, okay. I want to live in Mayfair. I can't afford to live there. Oh, it's the world's against me. I can't afford to live in Mayfair. It's expensive for the likes of me.
Yeah. Okay, so we kind of understood that there is the different perspective to see things, and
I bet Zach levered himself up to his eyeballs when he bought his first house, didn't you?
What?
When you bought your first place on your first mortgage, it was leveraged right up to your ears, yeah.
Oh no, well, it's also, it was even better than that. It was that the interest rates went up from like 5% or 6% to 15% at one point. So I was really living the dream, right? I mean, that was just so nice. And I suppose inflation, those are the early 90s, so there was a bit of inflation there, but really it was a horror story. Plus, it was a leasehold, so kept getting bills for mending the roof, like 60 grand shared between 5 people, and just like just stump up 12 grand. You got a month to give 12 grand, which was a lot of money then. So I was getting bombarded with the interest rate. It was a horrible experience actually, and I probably.
But you survived it.
Well, no, I survived it, and then I bought places in Spain because that's where I was living between 06 and 12. I managed to catch the property crash there, so I'm probably like level on the properties I've got there, with one up and one the same and one right down, and it's never going to change. So there is a lesson about the UK market is unique in the sense that it is a crowded space, and becoming more crowded by the day. So that's really, I mean, the government policy is to, that's their main policy. That's the policy that both governments agree with, Labour and Conservative, just to, the real estate Ponzi scheme is alive and kicking. And even though it may be a Ponzi scheme, the government helps you to get involved and helps and obviously tries for you not to lose money as well. So I suppose the main thing there, the government loves the stamp duty. So, on a 700 grand place, it's 50 grand or something horrific like that, 8%. So you're basically down. I mean, there are aspects to it which are quite horrific still. I mean, a 700 grand place and you're buying it and you've got to find 50 grand out of your pocket. That's not easy, is it? And then the deposit of, like, say, 250. So you're going to have 300 grand just hanging around in your pocket, which is not an easy thing to do when you're getting taxed up to the eyeballs anyway. So there is a problem there that it's a dividing line between people who are able to have cash hanging around, or bank of mum and dad hanging around, but on normal earnings. The whole thing is, or unless you want to live in sort of Solihull or something,
people do.
Sorry,
people do.
Well, I hear it's very nice this time of year actually, but the point is that it looks very shiny and nice on the outside, and I think also people forget the cost of carry of owning property, all those charges and everything else. You're a bit of a magnet for all sorts of bills and things like that. So overall, yes, it's a place to live, and I think that's the thing to focus on. But if you can rent a place to live very cheap, you can get a good deal on that. I don't see what the difference is. I think it's a young person's game as well. If you're in your 20s and 30s, it makes sense. If you're 50 or 60 or more, it's not, and the deposit is something you could live on and pay rent with, rather than necessarily buying a place and then just leaving it to HMRC to take 40% or whatever they do on inheritance tax. So the culture, I do think that there's some issues there in terms of real estate. The stamp duty and inheritance tax means that even if you make a lot of money, it basically, that's the government gets it back. Government taxes you twice. Sorry, the government taxes you 3 times on buying a house, on your income to get there, on the stamp duty, and then on inheritance tax.
Well,
so that's why they're so keen on it, because it's a tax magnet. It's a bit like driving. Driving is a tax magnet as well, for the government. So things like that, I think they're wrong, and I would change. I would change that system. And I would allow people to have more money for their old age. The social care system is a disaster. There's all these things. So real estate, yes, and it's the only way of hedging inflation, but it's still pretty brutal.
If you're a young person and you're watching this, you're on the wrong channel, mate. But anyway, if you're going to stick around, this is my advice, right? Learn how to program. Once you've learned how to program, you go to whatever country you like. And then You can pay whatever tax you want to pay because everybody wants to hire you and be as far away from your employers as you want to be. And I tell you, if you come to France, and you come to certain places in France, they'll give you a bloody castle for nothing. Well, not quite always, yeah. And if you go to various other countries in the world, it's not all south of England, rabbit hutch for 600 grand. You know, as I say, if you want to go live in East Germany, this is in the West these days, you can buy a house for 60 or 70 grand, a nice big fat house. Yeah. And you can be wherever you want, you can go wherever you like. Yeah, if you want to tie yourself to a tree in some country, you're going to get all those problems. Rather than say, go to Dubai, live in Dubai in a skyscraper, overlooking the
that's the other thing. If you've got a family, you're basically
a young person. So it's a young person.
Yeah.
So the motivation is be a computer programmer, never get married, always be able to move around, and buy your own place, and just not be no family.
Not having to worry and complain and moan and groan about how the government's ruining your life. I think that's a good place to start. Yeah. And then when you've made your money, because you're a great programmer, you can always come back. You don't pay any tax on any money you bring back into a country once you've left it. Yeah, and then you can retire, right? Whereas you come you're staying in the UK, doing your job, and flipping Big Macs or whatever it is, and not highly skilled in something that everybody wants, paying half your money over to the government in one way or the other, be it
you're a wage slave. You are a wage slave.
Insurance or rates or car insurance or parking fines, and then be caught in that trap. You can't get out because you just love it too much, baby.
I think it depends on the person. There are people they like to kind of travel around and this kind of lifestyle. There are other people they like to put their roots. They like.
Well, the young people are the ones that have got the grind. They're the ones that have had 2 years chopped out of their lives. They're the ones that feel they can't afford to buy a house. They're the ones that feel that they're being denied because the old people got all the money and they haven't, etc., etc., etc. So what's the route out for them? Well, the route out for them is to skill up and ship out.
Well, I don't think the solution is just to keep moving from one country to the other, because I don't like that, and I'm not old, and I never liked it, even when
it's what the rich do. Funny enough, there's a reason for that.
I'm not understanding.
I said what I've just described, the moving about bit, is what the rich do.
Yeah.
And there's a reason the rich do it. Because it's great. They like it. They enjoy it. It's fun.
Okay, well, that's there was a good reflection for young people to consider.
And if you get tied to the land, what does that make you?
It depends. It can give you more problem. I agree on that. And it's going to be maybe more expensive, but maybe you like it. Maybe you like the fact that you are
tied
there.
To the land. Tied to the land, tilling the soil.
Or
the aristocrats in the
it might be people like the community, the place where they are. They just like where they live. They're different, but it's definitely a good point for young people probably to consider.
So Zach, give us a stock tip. Come on.
Okay.
No, that was it. I told him my thing was that you've given us a stock. That's the one. That's the one. My father was saying, how do you let's get some dividend action in, and you've given the stock. So I think that's about really.
It's an ETF.
Yeah, exactly.
Can I just wrap it up with some crypto and see what you think about the Tornado Cash saga? So. Basically with the government, the US government sanctioning Tornado Cash, and what that means, if that it was wrong, it's still valuable to have a platform like that. Maybe we can start saying what Tornado Cash do for people that don't know about it.
Well, it enables criminals to hide the stuff they stole. Yeah, because you go if you're a North Korean hacker, you can hack into one of the bridges and take a load of coins, stick it in Tornado Cash, and it mixes it all up and makes it and spews it out the other side and makes it hard to follow the trail.
So, Clem, what about what Vitalik said? I made a donation for Ukraine using Tornado Cash. So Tornado Cash allow me to give anonymous donation. And, you know, if that is not possible, anonymity on payment, it can't be done anymore.
Yeah. Well, there you go. So, you know, and it also stops the North Koreans who run a concentration camp for a country to stop them hacking into places like America and trying to bring down oil companies and steal billions so that they can fund a dictator and his fascist Nazi ways. Yeah. Which is worse, Vitalik losing his privacy to give money to Ukraine or to stop somebody like Kim Jong, whatever his name is, from doing what he does to his people.
Yeah. I see the point, but what about all the anonymity in crypto that we always kind of wanted? Maybe not we, but
we might all like to have our mask. But when someone who's got the mask on is a vile serial killing dictator, I think, you know, there's a case that says that people shouldn't be able to go around in masks all the time. Because remember, all this facilitation of innocent people is that much. And the facilitation of really bad people is that much.
So it's a trade.
All the North Korean stuff was going through Tornado Cash. Yeah. And you don't think the Tornado Cash people are going, oh, we're doing it for Vitalik so we can give money to Ukraine. Mm-hmm. Why does he want to be anonymous when he gives his money to Ukraine? There is a reason for privacy. It's a good thing. Yeah. But when people set up, look, people get killed by hammers all the time. Yeah. But when you make a weapon to kill people, then it shouldn't necessarily be able to be bought over the counter. Right? This is a weapon. It's designed to be a weapon. It's run like a weapon, and it's used like a weapon. And some people shoot vermin with it, and some people do what the North Koreans do with it, which is make billions at innocent people's, cost, and then use that money to do diabolical things in North Korea. I mean, that's bad, isn't it?
Yeah, it's a trade-off, and it's better to.
There's no trade-off there, is there?
No, I'm saying it's a trade-off of the crypto space. It's like
a crypto weapon of mass destruction.
So the trade-off is that sometimes, you know, even if privacy is a good thing, so perhaps platform like that, they are just not so good as, or they are used mainly for.
All tools are double-edged swords, but some tools are designed to be, you know, for evil usages. Okay. And Tornado Cash is clearly designed to be of great use to the sort of people that have been mainly using it. So, you know, it's like technology is technology. It's amoral. It doesn't have morality, and people can use it for awful things and don't they? And this is an example of that, I feel.
Yeah. So verdict is good. There's been blacklisted.
I think so.
Okay, Zaki. Do you have anything?
Yeah, I do have a stock actually. It's I can't remember whether I've said it before, but it's gone down from 22 quid to 6 quid, or 6.40 at the moment. And it's called Audio Boom. It's a podcasting company. I use it when I upload my interviews and all the other stuff. I think it's, you know, I think it's got a 200 million market cap now, but I think it's basically become a standard international platform. And I think 22 quid to 6.50 is just, you know, obviously a lot of stocks have gone down recently, but I think the market's recovered. It hasn't recovered. I think it's overdue a recovery. And I was familiar with that type of platform and podcasting and everything else. And I think it'll eventually become one of the standard, you know, like it's obviously it's a UK company, but it'll become, you know, an international platform, which, other companies would use or buy or whatever. So that's my one for the week. It's just right on the lows as well. So that's the one.
It's a very tough place for a internet technology company to be. To be in London. It would certainly be should be a Nasdaq version.
Yeah, no, if it was listed in America, it'd be $1 billion. It would be $1 billion. I mean, there's no question of that.
So basically, the idea that let's just see if we kind of all agree on that. The UK market is going to go up. It's probably going to go up, and
the numerical number of the FTSE will go up.
Yeah, but obviously the wealth within the stock market will stay the same because we have inflation.
Well, it's actually gone down now because actually with inflation, the FTSE's at the equivalent of say 6,400, not at 7,200, because the inflation has already meant that you've lost money or purchasing power. But at some stage, the pressures that are pushing the market down, i.e. all the disruption, as they wash out, it will go back to the value it was before COVID, which would be 7,500 multiplied by the rate of inflation, say 50%. So that would bring it up to sort of 11,000. Now, if by the time that occurs, we've actually had the equivalent of 100% inflation, which is quite possible, as a cumulative, 2020, 21, 22, 23, 24, maybe even 25, then the sum total of inflation may be nearer 100%. Then the FTSE would naturally tend towards 15,000. And everyone say, "Oh, look, stock market boom, yay!"
But it didn't.
You're just back to where you were.
It didn't. And what about these dividend stocks? I mean, are we going to still see big dividend as everything kind of settle back, or we are going to see maybe lower dividend in the future? Is there any correlation to that or not really?
Two ways to look at it. One way is the American markets and other high value markets are going to fall heavily. And therefore the valuations in those markets will come down closer to where they are in the UK. Because the UK market is absolutely on its backside, has been for almost a generation, and everything's dirt cheap. Right? In comparison with the US, if you look at, say, Exxon is like 3 times more highly valued than BP. Right? Why wouldn't Exxon come and buy BP? Because it gets all that business, which will be marked up in the US market. Well, the answer is it wouldn't be allowed to, right? But in smaller companies, they can, they might, and they probably will. So, for example, somebody like Imperial Brands would get bought by Japanese tobacco, because Japan Tobacco is one of the big tobacco companies. It's got a great valuation in Japan. They could buy Imperial Brands, which is valued at peanuts, and get all that profit, get all that value, and basically be paid to do it. Why wouldn't you do that? The only thing getting in your way is they speak Japanese, and the guys in London don't, and they have to fly a lot to go visit. And the British will go, "Well, you can't go buying our last cigarette company." Oh, okay then. And you know that the bargain basement Britain is there for everyone to see in the stock market. It's only a matter of time. Now you can get back on an aeroplane and come visit. That process will start, and I think it's already starting in the US. Takeovers are starting in the US. There's all that M&A has been stopped for 3 years because people just could not get out. And taking over a business over Skype is, pretty much more tricky than going to a boardroom and, being face to face about it. And that process has started and is now in process. And we'll be seeing a lot of the British FTSE 100 under attack, effectively, to be taken over, because you can buy their 5% dividend for a 3% bond. So you're making 2%. You're getting paid 2% per year just to buy these people for free. I mean, who wouldn't do that? And it's coming, and it's here soon, I think.
Okay.
Sorry.
Well, I think that's a real question that people, are the investor are should consider, but also they are asking themselves as well.
Well, the way to do it is for people to go and look at the valuations for obvious companies in America, like Exxon, and then go look at Shell and see the difference, right? So, for example, I'll just do that right now. So, Exxon is called Zom in the US, and it's a very lowly valued company. It's actually on a really low PE, but it's got a turnover of 276 billion and it's worth 380. So that's about 1.4 times sales. Yeah. So if you go to Shell is valued at 0.8 cents, right? So not quite half the value. Exxon is not quite double the value of Shell in terms of its valuation by the market. Now, if you go and look at technology companies, you'll see a ratio. In America, they're somewhere between 5 and 10 times sales. In the UK, it's between 3 and 5. So you come in as a US company, buy a 3 times technology company, and make 300% return on your money immediately, right? All you got to do is come and buy. All you got to do is come buy and be allowed to. Yeah. And you look at any company, like for like company, and you'll see that that disjuncture. And you know, it's not going to be forever, right? Because it just makes too much sense to come in and just buy cheap and do asset stripping. Yeah, it's just all you want to do is do asset stripping, and who doesn't want to do that? That's what these private equity people do. Yeah. Let's see if I've got one here, for example. It doesn't always pan out, but you'd be amazed. Yeah. So, you know, look at all those different companies. You look at cigarette companies, you see the difference. You look at oil companies, you see the difference. You look at supermarkets, you see the difference. You look at tech companies, you see a big difference. Yeah. I mean, the PEs in America are like 18, in the UK is like 13. Right. So American companies can go from anywhere between like twice as highly valued to 10 times as highly valued as the UK ones. And if you look at the German market and the American market, they're the same. If you look at the British market, the French market, they're the same. And, you know, France and the UK are in the doghouse, and Germany and America are in the heavens. And you know, they're going to come calling, aren't they? Because you can just buy stuff. It's bargain basements time, you know. Everything's on sale in the UK. As Zach knows, and as you know, we've moaned about it. The UK market is lame. I mean, literally lame. And why it's so lame and damaged is an open question.
You think from September, you think from September things will start heating up, and that'll actually be a driver for the FTSE as well?
Yeah, I think absolutely. I mean, you know, half my mind says it's a very scary market. It should be sitting on the sideline. But ultimately, it's going to go up. It's already going up, right? Because it's looking a year out. Market doesn't look at tomorrow. It looks at about a year, maybe a little bit more than a year ahead. So it's pricing things today where we're going to be in a year.
Yeah. Okay. So basically, one opportunity is for people to buy the ETF, the iShare ETF, dividend, and then just forget about it.
Yeah, absolutely. And that goes for the ISF, which is the FTSE 100 tracker. And that goes for the RUKD if they want.
So basically, they can get the upside on the stock, and in the meantime, they get a great dividend.
Yeah, or as I just wrote, they could put half their money in the FTSE tracker and half their money in the RUKD, have a 5% yield on average. Yeah, and get half of best of both worlds.
Yeah. Okay, well, I think we discussed a few good strategy and also a few points, and I think that's all for today.
And sorry for our American friends who'll be bored with this by all this you did.
Yeah, I think we need to find something good for the US at some point, because we are always saying they are overvalued, they are overestimated, they are, you know, they're just too good to be true.
You know, their market crashed, right? Their market has crashed. Their market is down 25%, which is a crash.
Yeah,
they have had a crash. The question is, will they have another leg, or was that the bottom? And I think that was probably the bottom.
Maybe what we can do, we can bring a US guy on the show sometimes and let them, you know, to kind of say something and counter
subtitles.
Yeah, exactly.
Oh, well, I'm from here, are you?
No, come on, they're not too bad. Okay, everyone, thank you so much for watching, and thank you so much, Clem and Zach. Enjoy your